Hey everyone, welcome in to another daily editorial here on the KE Report. I'm getting an update from Heliostar Metals. We're going to be talking about updates, really a number of different projects here, both the newly acquired portfolio of producing mines in Mexico from Florida Canyon Gold, which came from Argonaut, and drilling that's starting at Ana Paula, 2 phases. This all ties together with a debt facility that the company announced while at Beaver Creek, the conference last week. I am chatting with Charles Funk, President and CEO of Heliostar Metals. Heliostar is traded on the TSX Venture Exchange under the symbol HSTR, on the OTCQX under the symbol HSTXF, and the Frankfurt Exchange RGG1. Charles, before we get into the news, let's get a quick update on your takeaways from that Beaver Creek Precious Metals Summit. Last weekend show, I chatted with Dave Erfle, and we talked about just how bifurcated this market is for metals stocks. So the majors are doing well, and there's really just a select few, maybe 10, 15% of the mid tiers and juniors that are benefiting from this rise in metals prices and the liquidity, the capital that is available to these companies. But then there's also a large number of companies that are continuing to struggle. It was my biggest takeaway from that Beaver Creek conference. Charles, who did you meet with? What was your takeaway from that conference last week?
Yeah, we met with a lot of our existing shareholders and potential new funds, given it was the first chance for us to tell the market our plans for the assets that we've bought. So I think we have the good fortune of being in the haves, our stocks moving quite nicely as the re-rate that production gives you, as we explain our free cash flow and our growth plans. So it was a great conference for us because it was our first chance to lay out our plan, and it appears to be being well received.
All right, let's talk about that September 10th news release then, the $10 million US debt facility to support the acquisition of the production assets. It's actually 2 $5 million facilities. Charles, explain to us how these facilities will be used, how they will support that acquisition, and even more importantly, get you more into production.
Yeah, the incredible transformation that comes with production and cash flow and the timing. We've been very fortunate to have bought the assets in the middle of this year and seeing this gold price means that we don't have to do equity dilution to acquire the projects. The free cash flow they generate over the next few months will pay for that acquisition. And so we did 2 debt facilities, one, a $5 million loan from the Dean's Knight Fund, which will pay for the acquisition and we intend to repay from cash flow. And the second, a revolving working capital facility with Ocean Partners, a sort of prudent insurance policy to have for a production company at our scale. And you see our share price move immediately on the back of those. I think there must have been an expectation that we were going to raise capital to do that. And as soon as we made it clear that we weren't diluting our shareholders, we gave up less than 1% of the company's equity to cancel the $20 million loan or $20 million milestone payments that we owed on Ana Paula, and we bought production. So a really strong deal for our shareholders that I think made it clear that there was an equity dilution to close the transaction. And I think that's what started our share price moving up on the re-rating that we think's ahead of us.
Okay, one comment you made there that I want you to elaborate on is that the repayments, principal and interest, you're planning on funding exclusively from cash flow, operating cash flow. Does that mean right away when you need to start repaying these, you'll be cash flowing enough that you won't need to dilute or drain the treasury?
In short, yes. That's one of the incredible benefits of the acquisition that we took on is from July 11th, the Mexican subsidiaries are operating for our financial benefit. And so the cash that they're building up is the cash that we'll use to pay for the assets. Kind of an incredible opportunity for Heliostar shareholders.
Now, Charles, there was also a note in that news release that announced that you no longer will proceed with the previously announced letter of intent for the US $20 million gold-linked debt facility. Why not go with this one? Are these debt facilities, the ones announced on September 10th, just simply better terms for the company?
Yeah, it's the power of production and multiple asset base. As a single asset developer, we had a higher cost of capital. We effectively had to give up the economics on 12,000 ounces for Ana Paula as a standalone project. But with gold production, you can get materially better terms. So the combination of cash flow and better terms meant that we moved to a better outcome for Heliostar with these new loans. You talk about it in your bifurcated market and who the power of production has really opened the door for new potential investors in Heliostar and a lot easier for us to conduct our business of building a large mid-tier gold company.
Okay, let's talk a little bit about that because that is the strategy here. You make a comment within the news release that once this acquisition of this portfolio of producing mines closes, you're estimating November of this year, that Heliostar will then be a producing gold company with cash flow, healthy working capital balance, and in a position to grow your production base to 150,000 ounces per year over the next 3 years. Take us through that roadmap then. What do you estimate starting with when that acquisition closes, and how quickly will you grow to 150,000 ounces a year?
Yeah, so if you start, we bought Ana Paula at the beginning of last year. So if you look at the last 18 months, we've bought 3.5 million M&I ounces of gold and nearly another 3 at Cerro de Gallo that's in the historic category until the tech report's updated. We bought 2 producing assets. We've got 2 assets that will come online with construction decisions next year, and we did it all for $15 million US. Tough markets are tough for equities, but we put together a portfolio in that tough market that we think we can extract a lot of value out over the next few years. So looking forward, as you touched on, the Mexican antitrust approval comes in early November, and then we'll put out, I think our re-rate comes on 3 big bits of news late this year into the beginning of next year. That's the production guidance in 2024 that we announce on closing. Strange to put out production guidance in November, but that's how this deal works. Then the forward-looking production guidance next year for 2025, and I think we have the potential to surprise people there, and put out a PFS on La Colorada, showing the economics of restarting the La Colorada mine with the permitted cutback to the pit, the Creston pit. And so by the middle of next year, we'll have made a construction decision on cutting back the permitted pit at La Colorada. In the meantime, we'll have drill results from the La Colorada drill program. We'll talk about the drilling coming shortly from Ana Paula. And then at the end of next year, we'll make a construction decision on the back of an FS on Ana Paula Phase 1. So we think we have 2 approximate 50 million capex steps to get to 100,000 ounce production that'll be online by the end of 2026. And then we'll scale up Ana Paula to be larger and grow to 150,000 ounces, all from permitted or permittable projects in the current environment in Mexico. It's a pretty strong and exciting growth pipeline for us.
Let's talk about the Ana Paula project then. Just yesterday, you announced the start of a 5,000-meter drill program. This is 2 phases, the first phase being 7 drill holes, 2,600 meters. What is the overall strategy with this 2-phase drill program?
Yeah, very brief. It serves a number of purposes, but it's all summarized by resource growth. We think that we can expand the resource that we put out in November last year. Ultimately, it'll need more than this drilling, but I think we can grow Ana Paula in the shallow part of the deposit to over 1.5 million ounces, and that's our goal. So it's great to be back drilling. We haven't been drilling since late last year. We're trying to extend the high-grade panel down plunge and down dip to add ounces, and also continue to flesh out the parallel panel that we discovered in the second half of last year. So we get 2 bites with every drill hole, drilling through one zone into the other. We need more network material. We'll increase the confidence in the resource categories, but ultimately we're driving a bigger resource because we think it just needs to be drilled off to show that expansion potential.
What sort of step outs are you talking about? How aggressive are you going to be at expanding the resource?
We're taking some big step outs, up to sort of nearly 200-meter step outs. There's a lower zone that we think has the potential to connect. So we're taking some big step outs, chasing some geochemical vectoring that we've worked out, and then some sort of 50, 100-meter step outs below the current high-grade panel zone as well. So they're pretty material step outs where we like to take shots when we can, and this program's definitely doing that based on what we learned last year at the Ana Paula drilling.
Okay, I'll post figure 1 from that most recent news release. It shows where some of these proposed drill holes are coming from. At the end of this 2-phase program then, it sounds like you will be upgrading or updating the resource?
We'll definitely update the resource for the FS at the end of next year. In a perfect world, I think we continue to drill at Ana Paula next year. Now we've got to We've got to do our budget next year. We've got to look at the cash flow from a few of the opportunities that are in front of us for increased production. So, yes, we will update the resource. I would like to get more drilling done next year before we do that, but we'll look at that in next year's budget after we complete this program under our nose right now. We did get started drilling in about mid-August. We had a few issues with the drill rig, so we hadn't been progressing quite as quickly as we'd liked, but we've already got a couple of holes completed, and we're making pretty good progress with the drill program.
So, what's the overall budget for this program? How quickly do you expect the assay labs to be able to turn around these results?
Yeah, we're expecting our first results in October, and one of the great things in Mexico is it's a relatively cheap program relative to drilling in Canada or in other parts of the world. One of the great advantages of Mexico is lots of skilled labour and relatively low costs relative to the peer group in North America. So yeah, we'll be putting between 2 and 3 million to this program. Phase one, step back, review those results, and go back probably after Christmas for phase two and deliver the rest of that drill program.
Okay. Charles, man, there's a lot on the go with this company. I give you a lot of credit for what you've been able to do just in the last, let's say, year or so. What can you tell us about news flow then? What can investors be looking out for? As I said, there's a lot on the go, so simplify it for us, please.
Yeah, our investors have had to be patient with us, and we don't put out releases unless it's something we guarantee that we can deliver. We've tried to build that reputation where you can trust the company to do what it says. And sadly for us, that meant we were pretty quiet while we were trying to organise the funding for the bulk sample at Ana Paula. And then, literally 2 days after we did that, the Argonaut opportunity landed on our lap. But now, after a period of quiet news that's honestly probably hurt our share price, we come into a very catalyst rich period. Within the last 2 weeks, the debt financing, the Ana Paula drilling, we'll have our first results from Ana Paula in October. We close the transaction in November. We'll put out drill results from La Colorada from November into the next quarter. And then the big ones that I talked about, 24 production guidance, 25 production guidance, and the economics of La Colorada in a PFS update in January, and then all the while putting out quarterly production figures. So I think we've become a pretty when we're not in a position, we're not going to significantly dilute our shareholders to bring on 150,000 ounces of production, and all of those catalysts are coming in the next 18 months. And if we can deliver that, we're a much more valuable company than we are today. And I think you're starting to see that with our stock moving up to 52-week highs in the last week. And I think we have a lot further to run to get a valuation that you see our peers have. And that's the exciting part of the acquisitions that we made.
All right, Charles, thank you very much for this update. I'll post a link to the Heliostar Metals website, as well as, again, figure one from that most recent news release. Please, everyone, send me your questions for Charles on any aspect of this company. I'll have him address those. Also, follow up on the back of some more news. Again, Charles Funk, President and CEO of Heliostar Metals. Charles, thanks for your time today.
Thank you very much.